Hello, good morning. It's Tuesday the 8th. I'm FX Blue and this is the market brief. So house price data has finally shown hints of levelling off. This has taken a little while after the stamp duty holiday was withdrawn, and it still may be put down to January just being a slow month traditionally. But overall, house prices rose by just 0.3% in January, and that's down from 1.1% in December. Inflation and the increased cost of living is expected to bite in a couple of months' time. That may also have an impact on the property market. We may see prices cooling as potential buyers decide to stay put. For now though, all this leaves the annual rate unchanged at 9.7%. On the calendar, we've also got Q4 GDP due out. This is expected to be a very healthy 6.4%. The December data is forecast to be down about 0.5% due to Omicron, but we can expect that will bounce back pretty quickly. Boris was on. He was out and about with Sunak yesterday. It's clearly a ploy to show that there's no rift between them. Because it looks like time is an essential factor for Boris at the moment. The longer he can survive without a vote of no confidence, the stronger his position will become. So stepping out to play nicely with his main potential leadership threat was no doubt contrived to help that. In the market, the sterling rally that appears to have run out of steam following the latest central bank meetings. We dropped below 135 against the dollar. We seem to be getting comfortable around 118.40 against the euro. Over in the US, Biden was on yesterday. He was talking up the level of growth and the renewed activity seen in the US economy. He was delighted by how the US has powered through Omicron, creating 467,000 new jobs in January. However, with the midterms looming later this year, questions are being asked about what good has really been done despite those huge emergency bills that he drove through earlier. Will all the firefighting that he's been overseeing be enough for the Democrats to retain control of Congress? If the answer is no, then here's another question for you. Could we see dear old Donald resurface for the 2025 elections? Shudder at the thought. Inflation data is due on Thursday, where the headline inflation could reach 7.5%, and core inflation is expected to remain well above 5%. And that presents an interesting quandary for the Fed. Following the positive payrolls data, if inflation continues to rise at a fair old lick, it may make it more likely the Fed will crack on with a 50 basis point hike to start the new cycle. Keep an eye on that one. That may well spur on the dollar to new highs. That's it from me. Have a great day. Join me again tomorrow.
If you do not have a clue, then just tweet through and ask FX Blue.